Hey, Travis with Student Loan Planner. Maybe you have huge student loans from pharmacy school. I'm talking about 100,000, 200,000, or 300,000 or more. That's not all uncommon these days as people go to increasingly expensive private schools that are popping up, it seems like at the rate of a couple every year or two. Now, if you have a lot of student loan debt from pharmacy school, then you have two options for loan forgiveness. One is the Public Service Loan Forgiveness Program. Two is tax bomb loan forgiveness in the private sector. Let me explain how this works. For a pharmacist that's benefiting from the Public Service Loan Forgiveness Program, you might go to a residency. You might be a PGY1 and a PGY2, and you might go through that, make some payments based on your income on the pay or the repay program during those couple years, and then you go into a hospital setting and you become a hospital pharmacist. You want to make sure that you're paying on an income-driven program like pay-as-you-earn or revised pay-as-you-earn. Pay as little as possible and save the most you can in your retirement accounts to lower your income. This will result in you getting hundreds of thousands of dollars forgiven tax-free. Pharmacists frequently make mistakes with this because they're either paying more than the minimum, or they put their loans into paid-ahead status, or they're not putting money into retirement accounts, or they're not filing taxes separately when they should be filing jointly, or vice versa because they're married and their spouse has income or debt too. And it's just a big issue. It's complicated and it causes lots of problems, but the PSLF program is actually a little bit easier to understand and deal with because you don't have tax penalties. You don't have to tax payment at the end of those 10 years of payments to pay. Now, the second type of loan forgiveness for pharmacists is the tax bomb loan forgiveness in the private sector. So this is a program where you're paying on pay-as-you-earn or revised pay-as-you-earn. If you're on IBR, you're probably on the wrong plan, and you're going to pay 10% of your income for 20 years with pay-as-you-earn or 25 years with revised pay-as-you-earn. And you pay this percentage of your discretionary income for this period, and at the end, you will owe a large balance, especially if your debt-to-income ratio is very high. So in other words, if you went to a private pharmacy school, let's say, Toro, for example, and you owe $300,000 and you have a $120,000 income and you do the pay-as-you-earn plan, you might owe $500,000 at the end of those 20 years after paying a small percentage of your income for 20 years. Now, you would owe taxes on that $500,000. So let's say you owe $200,000 of taxes on that $500,000 forgiven balance from 20 years from now. So you would have to write the IRS a check in the year of forgiveness for $200,000. Could you come up with that? My guess is that that would be pretty challenging. And the good news is if you have the right plan, if you have the right advice, then you can put away a monthly amount every month for 20 years and have that amount of money forgiven because you're going to have that forgiveness happen with the loans, but that forgiveness is taxable. So you have to cash in your brokerage account, cover your tax bomb with that check, and then you're good. You get your loans forgiven. Now, why is that better than just refinancing and paying it back? Well, if you're making $120,000 to pay back $300,000, you would have to pay over $3,000 a month for 10 years to pay back that debt. And if you do that, there's a good chance that you're not going to have any money left over for retirement, for investments in general, or even achieving other financial goals like owning a house or sending your kids to college by saving for 529 plans. So these two kinds of loan forgiveness make sense if you work in the public sector as a pharmacist or if you work in the private sector and your debt-to-income ratio is above 1.5 to 1. So in other words, you earn $100,000, but your debt is over $150,000, then your debt-to-income ratio would be over 1.5 to 1, and going for forgiveness in the private sector will probably make sense, and you probably will want to save for this tax bomb. Now, what my experience is some pharmacists figure this out after researching this for dozens of hours and making sure they're not making any mistakes. But if you would like to get a plan for your pharmacy school loans and know that you're not making mistakes, reach out to us or just click on the Hire Us page and then click Schedule Your Consult, schedule your plan, and book a time with one of our CFP or CFA planners that can help figure out your pharmacy school loans to make sure that you don't make any mistakes, to make sure if one of these two kinds of pharmacy school loan forgiveness strategies work for you instead of refinancing. And I really encourage you, regardless of what you do, get a plan. You will be very happy that you did.